Hi everybody, this is Lara with your weekly video for US oil for the week beginning or ending Friday 10th of March. I'm recording the video after New York has closed, so I have final volume data. That triangle as I had it drawn last week on the main daily chart was invalidated. The triangle needs to be redrawn and reanalyzed in terms of subdivisions. It could still be continuing sideways. That goes for both Elliott wave triangle and the classic triangle pattern. Triangles are really tricky structures. So many times you think a triangle is unfolding and maybe even complete, only for it to morph into a combination. So it's important to consider that alternate. The second zigzag and a big double zigzag could be about halfway through. An intermediate B may continue sideways as a triangle in that second zigzag. The alternate still has a target for upward movement. The main count, I don't have a target for support yet. We have to wait for the triangle to end, but I would actually rather use that trend line on the weekly chart. This is the weekly Elliott wave chart, and this is the trend line I'm talking about. This trend channel, here's the upper edge, here's the lower edge. This is copied over from the monthly chart. It contained all of the bear market until this breakout here. As price approached the trend line, it found resistance, pulled down and away, broke out, tested support, another test of support, another test of support. This trend line now has strong technical significance. I would rather use this line than any price point as a guide to where I expect cycle wave 2 may eventually come to an end. Cycle wave 2 is unfolding as a double zigzag. The first zigzag in the double is complete. It's labelled primary W. The double is joined by a 3 in the opposite direction labelled X, and the second zigzag is incomplete, A, B, C. 2 may not move beyond the start of 1, below 10.24, and within Y, B may not move beyond the start of A, above 93.75. Let's take a look at how B could be unfolding on the daily chart. This low down here is this point down here. The B wave could still be a triangle unfolding sideways. A, B, C, D, now it needs E to complete upward. This is a bullish engulfing candlestick pattern. It has support from volume. It tells us it's fairly likely that minor wave D may be over at this low. If it does continue lower, it may not move reasonably beyond the end of B, below 72.25. If intermediate B is a regular contracting triangle, then D is probably over here. If intermediate B is a regular barrier triangle, then D should move lower to end about the same level as B. As long as the BD trend line looks essentially flat to the eye, a barrier triangle would remain valid. That's the only Elliott wave rule that involves a degree of subjectivity, unfortunately, and so this invalidation point is not absolute. When the triangle is over, a downward breakout would be expected because Elliott wave triangles are always continuation patterns. For both the contracting and barrier triangle type, E may not move beyond the end of C above 80.94. If we do get an invalidation point above that, it would be difficult now to see how C could continue high. It looks like such an obvious three-wave structure. So if we get a new high above 80.94, this would be the wave count that I'd probably have as a main. It's important, like I said at the beginning, if you think a triangle is unfolding, always consider an alternate. In fact, always consider a combination alongside your triangles. For the first structure in the double combination is, this is a double zigzag, not a combination. I'll get to Y when we get to Y. Okay, yep. The first structure in the double is a zigzag labelled minor wave W, A, B, C, subdivides 5, 3, 5. The double is joined by a 3 in the opposite direction labelled X, and the second structure in the double, if B is over here, must be a zigzag because B has retraced less than 90% the length of A, so Y can't be a flat correction because that's a minimum requirement for a B wave in a flat, and that minimum requirement isn't met. And so Y may be a zigzag, A, B, C to continue higher. C to continue higher would most likely take Y to move reasonably beyond the end of W so that the whole double zigzag has an upward slope and Y achieves its purpose of deepening the correction. And so the target would see that achieved at 84.79, Y would reach W. And then we'd expect a downward breakout. So if the triangle is invalidated again, then this would probably become the main wave count. We really have to be quite patient with triangles, unfortunately. On the weekly chart, you can see this consolidation. It's been going on now for about 16 weeks with resistance about 82.5, a zone of support about 70 to about 72, and prices just moving sideways. Doesn't have declining volume though, and the last downward week does have a little increase in volume. That looks a little bit bearish, but let's look inside that week. It is an outside week and it's closed red, so volume may be more to the downside, but I think we should look at daily candlestick bars to make a judgment on that. On balance, volume gave us a weak bearish signal breaking below support. It tested resistance. It's moving down and away. That's another weak bearish signal. It's very weak though. ADX is indicating there's a downward trend, which at the weekly chart level is now extreme. RSI, money flow, and stochastics all neutral, and ATR declining as price moves lower. There's weakness in this downward movement. So the larger trend still remains down according to this chart, and there is some push from volume. On the daily chart, we can see the huge triangle pattern continuing sideways, and the upper edge of the triangle pattern now adjusted. Here's a huge bearish candlestick pattern. Here's a bullish engulfing candlestick pattern with push from volume. So it looks like this downward swing might be over, finding support about 75, an upward swing maybe to find resistance at the upper edge of the triangle pattern. If this pattern is breached with a close above it, then that would be an upward breakout. The lower edge breached with a close below it, that would be a downward breakout. But these lines, well, this one now has a few tests. This has got about 4 tests. The lower line only has 2 tests, or maybe 3 if we count this as well. It doesn't really have great technical significance. So I think we would want to see the breakout in either direction coming with volume in a fairly strong increased range with the candlestick in order to have some real confidence in it. The bullish engulfing pattern does have some push from volume, so that suggests that this downward movement may be over and an upward swing may be underway. That fits the main Elliott wave count, also fits the alternate. On balance, volume gives a weak bullish signal at the daily chart level, but this line's been broken here. That was a bullish signal, coming back to test support, moving up and away, another bullish signal. Not a particularly strong one though. ADX is telling us there's a new downward trend at the daily chart level, so both weekly and daily, ADX is telling us there's a downward trend, but price is essentially consolidating. It's been moving sideways for 16 weeks. A downward breakout does look more likely than upward if ADX is to be believed, but we really need to see the support line of the triangle breached for confidence that we really are having a downward breakout and that downward trend is continuing. Because the reality is, even though ADX tells us there's a downward trend, it could be short-lived. It told us there was a downward trend here before for this, couldn't catch up with this, tells us there's a downward trend again here. RSI, money flow, all neutral, stochastics neutral, moving down from overbought back into neutral territory. That's it for me this week with your oil analysis. I hope everyone's looking forward to an awesome weekend, and as always, thank you so much for your support.